Welcome everybody to today's webinar. My name is Sandra Vidrio and I am the Business Development Officer at the Fresno Area Hispanic Foundation. Muy buenos días a todos. Muchas gracias por acompañarnos el día de hoy. Thank you everybody for joining us once again. I would like to get started with a few information on using the chat box tools and also the Zoom tool features. Our team is excited to welcome everyone once again to today's webinar. And we're also excited to share that we are offering our webinars on a bilingual. And if you're accessing today's webinar, you have the option to switch onto Spanish if you would like to hear the simultaneous translation. And so if you're using a computer, you can easily do that by clicking on the icon that says interpretation, and you'll see the English or Spanish feature. And if you're using a tablet or a cell phone, please select where it says more, and you will be able to see the language interpretation tool. And as a reminder, you can also use the chat feature, the chat icon, to be able to send in your questions as well as any information, comments that you have throughout the presentation. All of the questions will be answered at the end as a live Q&A. And this webinar is brought to you in partnership with the following companies, and we appreciate the support towards the organization to be able to bring these weekly webinars to our small business community, not only in the Central Valley, but throughout the region and even internationally. So thank you to Bank of America, Comcast, Bank of the West, Chevron, FHL Bank San Francisco, Donna G. Sales, Wells Fargo, Tri-Counties Bank, JP Morgan Chase, and Union Bank. Thank you so much for your support. This is today's agenda. Our guest speaker for today is Joe Salas. He is a loan officer at CDC Small Business Finance, and he will be sharing with us great information on alternative small business financing for business owners. And I would like to share with you briefly about our organization. The Fresno Area Hispanic Foundation is an organization in the Central Valley with the mission to promote education and self-sufficiency by fostering entrepreneurship. At this time, our team is providing the following core programs remotely to our community: our virtual technical assistance program, weekly webinars, and our microloan program. In addition, we have made available one of our newest programs, which is Womanpreneur, that launched in the month of May. And this is an 8-session program designed to help women entrepreneurs grow their business using online marketing tools and develop a strategic marketing plan. We're excited to share that we have one more class to go and the program will be concluded. And a great benefit of this program that's made available to women entrepreneurs is that 10 participants will be selected to receive a grant, a $5,000 grant. And so this is our first cohort that has been made available, and we're already planning for the next cohort sometime in the fall. And if you would like to receive more information on any of our programs and services, you can call our office at 559-222-8705 or visit our website to sign up for our weekly webinars. And you can also follow us on the following social media platforms: Facebook, Instagram, Twitter, LinkedIn, and YouTube at Fresno AHF. And I also want to remind that all of our webinars are recorded and uploaded to our YouTube account so that you can watch any previous webinars. And another resource that our organization has, it's currently sharing and promoting within our community is it's the distribution of personal protective equipment. And at the moment, our team, we have available hand sanitizers to small business owners that have recently reopened. This PPE has been made available to California small businesses through the California Governor's Office of Emergency Services in collaboration with the Office of the Small Business Advocate. For more information, please call our office. Once again, the number is 222-8705 to place your order, as our available supplies are limited. And with that, I would like to introduce to you our presenter for today, Joe Salas. And so I will be making him host at the moment. So Joe, welcome to today's presentation. How are you? Oh, let's
I have on the line Susan Lampling, which is my direct manager. So she's going to actually participate in this Zoom meeting with me and assist in any way possible. So let me go ahead and share my screen. And of course, okay. How's that?
Perfect.
Perfect. I think, Susan, you should be able to be unmuted now. Is it working?
If not, I can unmute.
Okay, good to go.
Technology.
Thank you, Joe. Life wouldn't be complete without a small technology glitch. So hello, everybody, and thank you so much, Sandra and the whole Hispanic Chamber, for giving us the opportunity to present to your group and meet you all. So I really appreciate it. My name is Susan Lamping. I'm the Vice President of Sales at CDC Small Business Finance. I've been here for 18 years, so for a long time now. The years just fly by, much like the days nowadays, right? And so I'm just going to say a couple of opening remarks, and then Joe will do the bulk of the presentation. So today, if you want to move forward in the slide, today I'll introduce the CDC and talk a little bit about who we are and what we do and a little bit of our history. And then Joe is going to talk through the areas of evaluation when a borrower is applying for a business loan, so that if you're looking for a loan, you're going to get the lender's perspective on how we evaluate a loan, which will really help you to be a little bit more objective about your loan request and think through what are your strengths and what are your weaknesses and how can we mitigate those weaknesses. So that's, I think, really the really key. And then we'll talk a little bit about the CDC compared to bank financing, and then Joe will also go into detail about our loan products. So just a little bit of background on CDC Small Business Finance. You want to move forward. So CDC, we are a private nonprofit small business lending organization. So we're not a bank, we do just lending. You can't open a business checking account with us or get a credit card with us. You can only get a loan. And we're really there to help small businesses get financing that haven't been otherwise able to get a loan through traditional banking means. So maybe you have some credit items on your credit report that prevent you from getting a loan. Maybe you don't have the collateral that the bank wants to see. Maybe you haven't been in business long enough. Maybe you're a startup business for various reasons. Maybe you haven't been able to get a loan. And so that's where we step in and help people get financing. We really are mission driven, and our mission is to make credit accessible to business owners like yourselves. So that's a little bit of background on us, and we'll move forward. And just to give you a sense of kind of the impact that we've provided over, over 40 years of being in business, we've created 125,000 jobs. We financed almost $4 billion in business lending. Under our direct programs, the non-real estate transactions, we've financed over $3 million in the community advantage loans. So I think right now we have about $2 billion in our portfolio outstanding. So we have a lot of money out there. We've made a lot of loans, jointly we've looked at thousands and thousands of businesses. So we're really there, to help you out. And so before I pass it on to Joe, I just want to mention one thing is around our debt relief program. So many of you are probably familiar with the CARES Act. Joe, if you want to advance the slide. The CARES Act that offers 6 months of debt relief payments on all SBA loans that are funded by September 27th. So if you are looking to borrow money, now is a really good time. Like, you want to do it earlier rather than later. Don't delay, because if you get funded by September 27th, the first 6 months of your payments will be made by the SBA. That money isn't tacked on to the end of the loan. You don't ever have to pay it back. It's basically a grant. Those first 6 months of payments are a grant. So it is really a great time to, you know, to get on that if you are looking for financing. And with that, I will pass it back to my colleague, Joe Solis, who is an amazing expert in business lending, a great client advocate, and based in your market in Fresno. And we'll go, you know, continue on with the rest of the presentation. So thanks, guys.
Thank you, Susan. Great to connect with you. We appreciate you joining us for today's webinar.
Yes, thank you so much. So we want to go ahead and talk about how do we at CDC and as loan officers and as writers and as the relationship managers, how do we evaluate a business when we get a loan package in? So when I go over these 5 C's of credit, I want you to think about your business and consider your strengths and weaknesses regarding your current situation. But currently we'll talk about credit, we'll talk about cash flow, collateral, capital, and conditions. So credit. Anyone who applies for a loan with 20% more ownership in the business, we have to pull credit on that particular individual, whether that's be the spouses of the business owners, any co-signer. And currently right now, our credit criteria is you have to have at least a minimum credit score of 620 in order to qualify for our loans. With the credit score, we want to take a look at your payment history, your percentage of revolving debt available, your length of credit history, and what types of credits you have outstanding, whether it's revolving, installment, mortgage. So all that comes into account. Now, if you have some derogatories or liens, obviously on your credit report, it makes it a little more challenging for us to extend credit, but there's always a story behind it. So it's not always a no. It's a, we'll take a look at it and go by a case-by-case scenario. So I want to take a look at cash flow. Okay, so your business profits, your personal outside income equals your cash flow for personal and business debt. So your business income could be profits on your most recent current or interim financial statement. Projected income for the new businesses are those planning significant expansion. So for any new businesses, new business startups, we do require a minimum of 2 years projections on the business. And that's just not projections on the income of what you think you're going to make. It's projections on income, expenses. You want that broken down month by month and on a 2-year scale. So what else we'll take a look at is if you have any other outside employment, if you have any other businesses, and we'll take a look at your spouse income or military income for the cash flow. Collateral. Collateral is a tangible asset that can be sold by the lender in the event that the business is not able to repay the loan. The nice thing about CDC is collateral is not necessarily a requirement for the loan, as it would be typically with a normal finance institution if you were to obtain financing. And the common types of collateral that we take a look at is your personal residence. If the property has an equity that's valued at 80% or more in the current market value, we'll take a look at your business assets, which is all inventory equipment owned by the business. And typically what that's called is a UCC filing on the business. And we'll take a look at any personal assets that you might be able to put up as far as collateral. Capital. Capital is, as a business owner, what do you have monies in terms to inject into whatever project you're wanting to do? So we'll take a look at any savings. We'll take a look at what sources typically for savings. It's the home equity lines of credits, partner contributions. Your families or friends could actually gift you the money. Typical capital injection is 20% for startup businesses, as well as for a business acquisition, it's a little less. We ask for a 10% injections into the business. Conditions. This is the story behind your business. When we talk to a business owner that's applying for the loan, that's looking to expand, that's looking to do a small business startup, we want to know, what experience do you have? What experience do the primary owners or operators have in the industry? So if a client was to come to me and ask me, hey, Joe, I would like to open a restaurant at this time. My first question would be, what experience do you have in the restaurant industry? Well, I've worked in the restaurant industry for 10 years. I've been a manager, general manager, whatever the story might be. That's good and great. If someone was to come to me and say, I want to open up a restaurant, I have no experience in the restaurant industry. I have no background in it. I just think it's a great idea. It's a great time to open a restaurant. I would probably say it's probably not going to work. We want that past work experience, that past experience in the industry. That way we know that you know how to run that particular business. If you don't have direct experience, but you're going to hire someone that has the same skills, abilities, allow the business to be successful, we will take a look at that as well. And most importantly right now, with what's going on in the world today, is how is COVID-19 affecting your business, and not only your business, but how is it affecting the industry? For example, I will use a restaurant right now. Here in California, restaurants have to operate on an outside establishment. Some restaurants are constructing tents. They're doing takeout, but their capacity right now is only about 50%. So obviously COVID-19 has affected their business tremendously. So we have to kind of tell that story and figure out what's the best possible outcome for that, and if it makes sense. So that was, basically going over the 5 C's of credits. I want to talk about the financing in which we offer here at CDC Small Business Finance. As Susan mentioned, we are a nonprofit organization. We're not a traditional finance institution. So primarily the clients that we get are the clients that go to a bank and are told no. So what type of deals do? We do viable deals with some strengths, but not strong enough for bank financing. If you've gone to a bank and you've applied for a loan and they tell you no, these are probably some of the reasons as to why you were told no. A lot of banks don't do startup business financing. Maybe you have weak cash flow. You don't have the collateral to put up for the loan. You might have credit issues. You might have some late, some derogatories. Your minimum FICO score doesn't meet the current bank's criteria. And a lot of the banks, they're smaller financing, 25, 30,000, 50,000. A lot of the banks won't even take a look at those types of requests. So that's where we come in the picture. So one of our main products here is our Community Advantage Loan Program. Like I said, it's offered directly through the CDC Small Business Finance. It's offered in these 3 states. It's offered in California, Arizona, and Nevada. That's where we have our footprint in regards to the Community Advantage Loan Program. Our loan ranges from $50,000 to $250,000, and these loans are offered for startups, existing businesses, expansion, and business acquisitions. Our rates, prime currently right now is at 3.25%. So we price all our pricing prime plus. So currently right now, prime at 3.25% plus 2.75%. And it can go as high as prime plus 6%. When you look at the prime plus 6%, our 6% rate on that spread is for businesses that are startup financing or are on a projected base income for those. So our typical rates don't go up to 6%, but they can for those types of financing. Our terms are anywhere from 7 to 10 years. And our minimum credit score for this particular product is a 680. Our Karl program. This is a new program that was just brought out. I believe it's been about 2 weeks. It's the same criteria as the Community Advantage Loan with a few different differences. It's open to the businesses in low to moderate income areas, LMI areas. And there's a lot of areas within Fresno County that do qualify for this particular financing because you're an LMI, low to moderate income area. So it's offered to early stage businesses in operation for less than 24 months. For LMI and vet-owned businesses, credit can be as low as 620. So our normal community advantage loan, it's a 680 credit score. With this particular product, it's a 620. So it does minimize our credit criteria on this particular program. We do offer 15 hours of free business advising, and that's done in-house through CDC Small Business Financing. This is not an option with the SBA. If you're receiving these funds, it is mandatory that you take 15 hours of business advising from the CDC, and that is being tracked. With this particular program, the first 6 months of payments will be made for you, and all CDC fees are going to be waived. There is a SBA government guarantee fee on this particular program, but as far as the internal fees from CDCs, we are waiving those fees currently. We do offer another loan, which is an impact loan, offered again by us, and it's offered in California to African American and Hispanic owned businesses and businesses located in LMI, low to moderate income areas. The loan ranges from $50,000 to $250,000. Once again, it's offered to startups, existing businesses, expansion and business acquisitions. This rate right now is prime plus 4.75. We'll do a 10-year amortization on this particular loan, but it's due in 5 years. And it's a more lenient criteria than our SBA lending option. We do offer SBA Micro Loans, and they're offered in these counties here, which is Alameda, Butte, El Dorado, Imperial, Los Angeles, Orange, Placer, Riverside, Sacramento, San Bernardino, San Diego, San Francisco, San Mateo, Santa Clara, and Ventura. And I don't see Fresno County on here, but it is in Fresno County, it's in Madera County, it's in Kern County, it's Stanislaus County. I'm not sure, I didn't realize that, my fault, I didn't catch it earlier, but it is offered here in our county. And these loan ranges from, it's a smaller loan amount between 20 and 50,000. And it's a loan offered to viable businesses that do not meet the bank's requirements. And those rates can be anywhere from 8.25% to 9%. Those terms are 5 years. And we do offer post-loan business counseling free of charge through our business advising team with CDC. So that is pretty much the end of my presentation. We did leave some time in here to answer any questions. I know we had a chat box going, so hopefully we had some questions come in, and please feel free to, if you didn't go ahead and put anything in the chat box, to feel free to ask anything you would like. Susan and I are here to answer any questions. If I can answer, I'm going to go ahead and refer back over to Susan to get her input. But thank you guys so much for allowing me to share. And my contact information is available. That is my cell phone number, and also my email address. So thanks again, and I'll go ahead and turn it back over to you, Sandra.
Yes, thank you, Joe, for the presentation, and thank you, Susan, also. And I see here a question, which is $20,000 the minimum loan amount? So
that is correct. Our minimum loan amount is $20,000. If you do have a request that's coming in less than $20,000, you know, we do partner with other local nonprofits in the area. I know that the Hispanic Foundation has a microloan program. There's other resources for you in the community. So, you know, if you are looking for less than 20,000, I'm sure we can definitely find you a home.
Perfect, thank you. And I do see another question here, and it says, the question is, what do we need to show in order to qualify for some of these loans? Well,
I briefly discussed in the 5 C's of what we look for. Obviously, if you're going to apply with CDC, we're going to ask for a a loan package, and in that loan package, we're going to ask for, depending on what the loan amount is, there's different criteria for what we look for. But, you know, typically we're going to ask for an application. We're going to ask for a personal financial statement. We're going to pull credit. We're going to ask for, if it's existing business, we're going to ask for previous year's tax returns, not only in business, but personally. We'll want to go ahead and take a look at your financial statements, so your profit and loss and balance sheets. We're also going to want to take a look if there's any existing small business debt out there. If there is, what does that consist of? And basically, we want to make sure that you're going to be able to service the debt in which we extend.
Perfect. And I know you mentioned credit, and sometimes, you know, all the documents the supporting documents are turned in, right? And then when it comes to the credit, whether it's, you know, not so much the credit score, but rather the credit history. So what's some advice that, you know, to give to these business owners as to, you know, the importance of going to look, you know, into their credit for their personal credit, but also their business credit?
Susan, I'm going to go ahead and pass that one on over to you in regards to the business credit.
Okay. Honestly, business credit is much less important to us than personal credit. I mean, let's say you're a startup business, or you started your business 6 months ago, and we pull a credit report on your business and it shows high risk because you just don't have enough activity on your business credit report. So what we look at on the business credit report is not so much what's the risk level, but do you show any open liens, judgments, or collections from your business? And as long as you don't show any sort of derogatory marks on your business credit report, you're fine, regardless of what the score shows or what the risk level shows. You know, oftentimes the business credit report isn't always reflective of the risk level of the business, but the personal credit is really what's important. And so what we're looking for, like Joe mentioned, you know, we want to see that credit score of either 620 if you're applying for that Karl loan, the Community Advantage Recovery loan that Joe mentioned, or 680 if you're applying for another loan. But what's even more important to us is what's on your credit report. Not so much the score, but what's going on. And we want to see that anything from the past has been resolved and that you don't have any outstanding liens or judgments or anything like that. And that if you have them from the past, that's fine. But we want to see that you've paid them off or settled them, or maybe you're on a payment plan with them and they've been taken care of.
Perfect. Thank you so much for clarifying. And you know, credit, it's a lot of the times it's one of those factors where, you know, if you haven't checked your credit report within a year, you know, we strongly advise you to do so, and you can connect. There's different platforms out there. I, for example, use the platform Mint, right? So, you know, it's where you connect all of your business accounts, not business, but, you know, personal accounts, and at least get to keep track of, you know, your credit score, and then understanding the different bureaus, right, where this information is shared among, which not all of them have the exact same credit score or the same reporting. So that's really important. I do see a question here, and the question is, what does that mean? 10-year amortization, but due in 5?
Yeah, so what that means is the loan is not fully amortized. Typically, you know, you're going to take a look at a loan, a 10-year loan with 10-year amortization, meaning your monthly principal and interest payments, by the time that loan is hit its 10-year mark, the loan will be paid off. With this particular program, we allow a 5-year, it's a 5-year term with a 10-year amortization. So you're getting the benefit of going out, extending the credit, extending it a little longer, but the payment is actually, the loan will be called after 5 years. So there will be what people refer to as a balloon payment at the end of that 5 years. So you can take a look at refinancing the debt after that 5 years. There's lots of different ways to handle the 5-10 amortization, but that's pretty much, do you want to add anything to that, Susan?
No, the only thing I would add is when that balloon payment is due, we will work with you to help you refinance that loan. And sometimes we'll refinance it, like, let's say, because that's our non-SBA product, the one that has the 10-year amortization with the 5-year call. And so sometimes we will refinance it into our SBA loan. So we help you. I mean, we help each one of our clients get that, make sure that refinance goes through.
Perfect, thank you. And I have another question that just came through, and it's regarding the Karl loan program. And the question is, what's the interest rate and the time of the loan? So I'm not sure, time of the loan meaning the time around time to get, pre-approved for the loan, but process.
So with that particular program, it's similar to the Community Advantage program. The rates start at prime plus 2.75, and it goes as high as prime plus 6, if I'm from my memory here. What was the second part of the question? The time frame?
Correct, the time of the loan. So maybe I can ask the participant.
Probably how long it takes to get the loan.
I would say right now, we're definitely trying our best to get all these done that we get the applications on. If we do get an application, I would say in the next 2 weeks, we'll definitely get it going, right, Susan? We'll definitely get it funded by that time. But as far as if someone was to come to me and hand me the application, a package on September 20th and ask me if I can get them approved, the answer is probably going to be no. So I would say with this program, if we're discussing the Karl program, I would say the sooner the better, because we don't know. I mean, they've given us this time frame as to when to get the funds out and allocated, but we don't know if there's going to be an extension on it. So I would say the sooner the better for this particular program.
And adding to that specific question, is there, I know with some loan programs, there's a pre-approval process, right? Is there a pre-approval process for the Karl loan program, or how? Yeah.
So typically, we do pre-quals on all our deals. So what that consists of is when I receive a loan package, I take the numbers and take all the financial numbers that were given to me from their tax returns, whatever we requested, and I pre-qual the deal. Now with that pre-qual, I send over to Susan, and Susan says, okay, yeah, let's move it forward. And at that point, we call that a pre-qualification. So that moves on over to our relationship managers, which are actually our underwriters. And they do a complete deep dive into the financials and give the either approve or deny. And then it goes on to a further step for a final approval with their manager. So if we can get it through pre-qual, we're looking pretty good. I'm not saying it's 100% guarantee, but at least if we can get it through the pre-qual, through myself, through Susan, and get it into underwriting, I would say you have a good chance of getting approved. But, we don't know. There's no guarantees. So there could be things that come up that we weren't aware of because the underwriters, the relationship managers, do a deep dive into the files.
Mm-hmm.
Do you want to add anything to that, Susan?
Nope, you did a great job.
Thank you. And I have here a question from a participant who is actually in the beauty salon industry. And as we all know, that's one of the industries that currently there's, certain guidelines that don't allow full operations at the moment. And so the question is, will I be affected to request a loan if I've had zero income since March due to the pandemic?
Can I take that one?
Yes.
Because I had a couple of back and forth with the person that asked, and I want to make sure that this is really important that this get addressed. So for our programs, your business has to be at least partially operational. So if your business is closed and you aren't able to operate your business right now through us, you can't get a loan. But I want to make sure that you have other resources. So one is, Veronica asked this question and she said she doesn't have any employees. It's just her basically as a hairdresser, right? And so if you operate as a sole proprietor and you file a Schedule C on your personal tax return, you are eligible for the PPP loan. Now with that, the PPP loan expired on Saturday. Saturday was the last day to submit it, but it might come out again. I mean, through this CARES Act 4 or whatever number we're on, the PPP product might be an option again. So I would really encourage Veronica and any of you who haven't got the PPP loan yet, if you file a Schedule C, it's just you, you have no employees, the calculation is the profit of your business, that's found on line 31 of your Schedule C, divided by 12 times 2.5. That is the calculation to determine your loan amount. So if you have a loss on line 31, you can't get a loan. You can't get a PPP loan. But if you have a profit, let's say your profit is, $20,000 divided by 12 times 2.5 is $4,166. So you could get a PPP loan of $4,166, which will convert to a grant, right? There'll be forgivable loan, and that'll be free money to you. So I just want to make sure people know that, because a lot of people think, oh, I don't have any employees, I can't get a PPP loan. So that's one thing. The other is, I don't know, and maybe Sandra, you're aware, or maybe Joe, you are, of grant opportunities, but a lot of cities and counties have various grant opportunities where you can get like $5,000, $10,000, that kind of thing. And so if there are any grant opportunities, I would really encourage you to research grant opportunities in your market, in your area. Sandra or Joe, do you guys know if there are any grant opportunities in the Fresno area for small businesses?
Yes, there are. Go ahead,
I
Sandra.
was going to share, I know that Fresno County did launch a grant opportunity, but unfortunately that grant cycle has closed. And also the city of Fresno had a second round of Save Our Small Business Act. And so I know both the city and the county has received additional funding from our government to continue, regarding assistance towards our community. And so we're hoping, we're keeping our eyes on looking out for a third round of these grants. So we are checking to see what's being made available.
Yeah, that's definitely another opportunity. But most lenders want to see that you're at least partially operational. Otherwise, probably a grant would be the best thing for you.
Yeah, and that's actually a good segue into this next question that I have here. And basically is, what is it that the CDC is looking at in particular when considering to fund a business that could potentially close if they don't get any capital infusion? Like working capital. I know that it's one of the situations where, they need a little bit of the capital to get going back to at least half of the operation, but at the same time, the uncertainty of what's going to happen in this next few months.
Yeah, I mean, I think that all falls in line is the story of the business, and we take, the nice thing here about CDC is we take every business, every application as on a case-by-case scenario. We don't, how would I say this? We don't always say no. We want to hear the story. We want to understand what's going on. And of course, right now, I've been in banking for, 20 years now, and just recently came to the CDC, but I've never seen this. I know we've gone through some economic downroll spirals and credit crisis and that sort of thing with the housing markets, but we've never seen small businesses shut down like this. And I think, the worst is yet to come. I really do. I think that it's unfortunate, but there's going to be a lot of small businesses that have to close their doors. But, we do take a look at every scenario, every business, every industry on a case-by-case scenario. So, that's all I can say is give me a call. Let's discuss it. Let's discuss, what's going on with your current operation, what's going on with the industry, and, let's try to find a resolution. If I can't help you out, I will do my best on referring you to other organizations that might be able to. Please use me as a resource. I'm here to help. I know my job is to go out and lend money, but we're a nonprofit, we're a community-based lender, and we're all about communities in which we serve. So please use me as a resource if you guys need to.
Thank you. Thank you. And we have a participant joining us from Nevada. She has a business in the rural area of Nevada,
Oh,
and
great.
would like to know where can she start looking for local grants or loans. So I know, definitely start at the local level, right? Connecting with
Correct.
the county, even organizations that might have some funding available, business-driven organizations, and taking a chance at those national grants that have been made available. I know there's a lot of corporations that have allocated millions of dollars in funds set aside to help and reinvest in disadvantaged communities. So just, it's like a student that it's applying for a scholarship, right? It's, just apply and the more that you apply, the higher your chances. I don't know.
Absolutely. And we do offer, Nevada is in one of the states in which we do offer our Community Advantage product. So please feel free to reach out if that's a possible option for you as well.
Thank you. And it looks like we have one final question here for now. And the question is there a fee for the application? So I'm assuming the Karl loan program application?
So up front, there's no application fee. You can turn in an application or a loan package and there's no fee. But we do have fees associated at the closing. And those fees vary, obviously, but they can be financed through the loan proceeds, where you don't have to come up with out-of-pocket expenses.
Perfect, thank you. Well, it looks like that's all of our questions for now, and I will continue here. I'm going to be sharing my screen, and so to continue with a few remarks here. And so before making some announcements, I want to say thank you to Susan and Joe for the presentation today. It is very important for our team to mention that leverage partnership like ours, the foundation and CDC, allows us to better assist our small business community. For example, I am excited to share with you some loan programs that are available on behalf of the foundation for existing businesses and also startup businesses. And so I know Joe mentioned, if you don't qualify for a specific loan program, there's plenty and many other organizations just like ours, nonprofits that have funding that have loan programs available for small business owners. And on your screen, you should be able to see the three main programs that the foundation currently has available once again, for existing businesses and startup businesses, such as our FHF loan fund, our USDA loan fund, and our EDA Colinda loan fund. You can see additional details on the slide about these programs and the criteria for each, but please feel free to reach out to Joe or myself, and together we can look at potential financing options for your business and help you out. And that includes the loan packaging, understanding what are the documents that need to be, that you need to submit in addition to the application, and bank statements, tax returns. It's a whole package, but there's a way to get it turned in. And that's, I think, what loan officers, right, want to see. They want to see a successful loan package to accelerate the process and not have to wait and go back and request a form that was missing. So it's very important to have everything submitted at once. And I also want to continue with our announcements about our upcoming webinars. So these webinars, like I mentioned, are brought to you on a weekly basis, and there's no cost to participate, and we are providing valuable, relevant information to help you out during your business operations. And these are topics of marketing, legal, financing, and also administration. And so this Friday, we're going to be having a webinar in Spanish, and it's in partnership with the California Department of Tax and Fee Administration, and we'll be covering the basics on having a California seller's permit. What is the requirements, but more importantly, how do you do the reporting towards it of the sales that you generate for your business. So this is a perfect webinar for those businesses that are getting started, and also those businesses that are in the food industry. I know there's a lot of questions when it comes to sellers collecting sales tax for business operations. And our next webinar is going to be, our following webinar next week is going to be on August 20th at 1 p.m. and it's going to also be in Spanish. And we're going to be having a representative from New York Life Insurance Company sharing with us information about how to calculate assess the management of your financial portfolio for personal finances. So we're excited for that webinar next Thursday. And our next legal workshop in partnership with New Business Community Law Clinic at Berkeley Law is going to be next Friday, August 21 at 1 p.m. And this workshop is going to be covering the guidelines for reopening your workspace. So one thing is reopening your, business operation, but another is, the plan that you have in place for your employees. And so they'll be covering information such as how to, keep a record keeping, be in compliance, and create your infectious disease preparedness and response plan if you have not yet created it. And of course, we'll be having a live Q&A during the presentation. So I encourage you to please visit our website. All of these flyers are uploaded onto the website, so you can go ahead and RSVP. And some of you that have joined us at our Negociantes Unidos breakfast meeting are familiar with the program and the networking opportunities that exist. And so we, due to the current circumstances that we're in, we are continuing the program, but this time offering it on a virtual platform, which is through Zoom. And so we will be having the interpretation feature enabled, and we're excited to have Dr. Juan Sanchez Munoz as our keynote speaker, he is the 4th Chancellor for UC Merced. He was recently appointed, and we're excited to have him as our keynote speaker to share with us about his, the perspectives and the vision that he has for for UC Merced, for the students, our very own public research university, and also an opportunity to get to know him, get to know more about his story, which is very inspiring and impactful. And so once again, this webinar will be offered at no cost, and you can sign up by visiting our website. And those are all my announcements for now. I want to say thank you to Susan, thank you to Joe for joining us for today's webinar. Very important, and we'll remain on the line in case anyone has any other questions. Thank you.